Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table. Welcome back. You're listening to Money on Tap. My name is Seth Krussman.
And I'm Ben Brayshaw.
And I'm Eric Morton.
We're glad to have you aboard. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Eric, it is so good to see you again, and it has been a while. Always a pleasure. How have you been, my friend?
Been doing well and just hunkering down and missed you guys, so I'm glad to be back on as well.
So it hasn't been the coronavirus that's kept you out of the loop, or is it the coronavirus that's brought you back to us now that you're in Washington, the epicenter of the corona local?
Yeah. Yes, exactly. I think you may have hit that on the head.
You're so busy that it takes a pandemic to actually get some time with you and get you back on air with us.
I like the fact that we have a little social distancing that's helped us recently. I mean, it's nice not to have to be in the same room as both of you guys. This is great.
Phew, that is true. Good point. You're on point already, Ben.
You know, I'm just thinking, you guys are like in the thick of it. I'm over here in New Hampshire, live free or die, and you guys are really, really like, Eric, you're in Washington. Seth, you're in Oregon. I mean, what's going on over there?
Well, it could be some other planet when you look outside, really, because I mean, it's gorgeous out. It's beautiful. Sun is shining. People are not walking around now. They're just, nobody's around.
You guys don't have the zombie apocalypse happening? What's going on?
Something like that. It really is. In the neighborhoods, however, they are walking around. You do see more people there, but if you ever make it downtown, it's just nobody's there. It's odd. You just see like a Amazon bag as a tumbleweed. Just going down the block. And you're like, okay, now I know what's happening here.
Wow. Funny. So we are bringing to you today a special edition of Money on Tap. We're not going to mince words here. We are going to talk about the coronavirus, and we're going to try to speak plain English, cut through the noise, get down to what's happening. With so much information out there coming to us, social media is our generation right now. It is, it's tough. It's hard to get through and figure out where things are coming to us from and what's really going on. We're going to do our best. And some of the information that we're going to talk about, by the time you get it, which is maybe, I don't know, 15 minutes from now is what it feels like. It could be very old and stale. And
good point.
The whole situation is going to be over. We're done. We're all back at work. We're looking back and saying, what in the world was that all about? That would be a great scenario. So on today's show, we are going to, again, talk about Corona. We're going to talk about the market. We are going to get into some opportunities that we see. We're going to get into the challenges. We're going to get into the truth. And oil. My gosh, what is really going on? This is a part of our world too. It is amazing how, call it challenged, call it crazy wild drop out of the sky. Several of the markets have been, but you know what, folks, we always want to make sure that we're here. We're going to get into solutions. So you're going to want to stick around. You're going to want to spend some time, and you're going to want to kind of chew on some of what we're talking about here. But eventually, we're going to get to Eric. That's why you're here, and saving some money and talking about some ways that you can really adjust the sails maybe more quickly to stabilize this ship and make sure you stay on track, and the financial plan that you put together before March is still valid. And how do we work through this? Sound good?
Sounds like a plan,
great.
Seth.
Well, I'm glad I'm glad it's not just me, but maybe it isn't good, and you guys should tell me that. No, you just know what, Seth?
No, it's good. We talked about it. It's good.
Well, but that was so 5 minutes ago.
Yes.
I mean, if you're watching the feed like I am, I'm like, I don't know. Maybe I didn't. Maybe what I'm saying isn't very, very true to form.
Well, I mean, I think, Seth, the thing is that there's so much news out there that nobody can identify what's relevant, what's true, what's false, what do I do, and then I've got all of my financials at the whim of this crisis that's so much bigger than just the coronavirus. Because when you talk about economics and you talk about the craziness of just shutting down the United States economy and the trillions and trillions of dollars that are gone, just disappeared, small businesses going out of business. I mean, we're talking about mortgages and rent payments and just regular bills for people. I mean, we have what is going to probably be the largest unemployment drop in a week's history coming up, or 2 weeks' history, ever to be said. It will be unprecedented, and no one knows what that means to their retirement plan. That no one knows, and I say this to people all the time when we sit down, and I say, the first 5 years of retirement are the first 5 years you can return to work. After 5 or 10 years of being out of work, your ability to be employed is slimming each and every day. And you have one chance to do it right, to do it well, to do it successfully. And this, for the guy who's 62 years old or 61 or 64, saying, I'm retiring next year, is now saying to themselves, I might be 30, 40% down in my portfolio. I can't retire anymore. I just lost almost half of it again. 2008 all over again. And what do I do? There's real fear. There's real financial panic.
I'm not going to disagree with you on that.
I'm speechless.
Yeah. Yeah, you got me thinking and feeling exactly what is transpiring for the broader world, as a matter of fact, because this is something that we've never. And okay, so let's talk about the truth here around what has happened in the world historically. Have we had something like this happen before? Yes. Like what? Well, let's take a look. Viruses that are not uncommon. They're just not. We've had multiple times in our history viruses come through the population. Recently, swine flu, that was 2009. What are the numbers? Around 1.4 billion people out of, at the time, a total 6.8 billion contracted the illness. That was more than people affected than the Spanish flu epidemic. Spanish flu pandemic. There was about 150,000 to 575,000 fatalities. Okay. Follow-up study in September 2010 showed that the risk of serious illness resulting from the 2009 H1N1 flu was no higher than that of a yearly seasonal flu. Okay. So some numbers right there for you. Wrap your head around it. We've been through this, but what is different right now? Nobody stayed home from work. One thing.
Well, I mean, they didn't even do anything. I mean, Obama didn't do anything until 1,000 Americans died and 20,000 people had it. I mean, that's the whole thing. I mean, right? I mean, we've got a number of hundreds of people that have it, but when the swine flu hit, it was really kind of inconsequential. It was something, and it attacked children. I mean, it was so much scarier. I remember thinking that, hey, we got to take care of that. But this is clearly serious. I think we just don't, as a public, know how serious, because we hear all sorts of reports, right, Seth?
Yeah. So let's talk about what's happening right now. So this is going to date us a little bit, I think, right? What are the current numbers that we have? Anybody?
Well, it's like, 280, almost 300 people have died in the U.S. 20,000 plus people have it.
Right.
Climbing. Italy has just had a staggering death toll of over 800 in a day. I mean, we got some serious stuff happening, but we also have some good stuff. We have Chinese factories. The pollution levels, they say, are nearly back to normal, which says that their factories are all running, because we can only measure China based on their outcomes, not necessarily what they tell us. And, I don't really want to say that China's not being honest, but I really think looking at the numbers, them saying they only have 80,000 people and 40 people getting it out of 1 billion, and you see thousands and thousands of people at other countries just getting it every day. I'm not sure that I really believe 1 billion people, only 80,000 got it.
And in all fairness to that, I hear what you're saying, like larger population overall, but it was the province where Hunan province where they contracted this, that it was kind of isolated, and the numbers are very similar. Total population there of that area is very similar to Italy.
But how isolated? I mean, if they can travel it to Italy and travel it all over the world, how can't they just travel it right through their country? More people are traveling throughout their country than are traveling worldwide.
Well, yeah, there was a direct relationship there with Italy because they had bought a lot of the fashion companies, and so they had a lot of people working in those companies too. So there was that same thing goes with Iran too, because there was a lot of open trade with Iran and China. So there was a lot of travel back and forth between those two areas, and that's where we saw that kind of the spread happen much more quickly in those areas. So what are we doing currently about this, and how do we see the market working? And if we were to take a look at 1957, the Asian flu pandemic, 1 million people infected. Okay, how did that look for us in our economy? We had a GDP that was down 10%, significant for the quarter. 3 quarters later, we were up 7.5%. Okay, we're going to talk a little bit about how markets react and what is going on and why is the market doing what it's doing. Here's one reason: stock markets and the markets don't like what is unknown.
Yeah, that goes without saying, but there's just so much unknown right now that I think, I was saying to one person, I said, I really think we just haven't seen the bottom. You never know when you've actually seen it until it no longer exists. But I think we haven't really seen the bottom because I don't think that the deep fear has really hit. I mean, we've got multiple states getting ready to shut down, 30-day closures, and I think the entire country is going to go that way. Whether you have one case or 100 cases, I was talking to a friend of mine who's in the police department. He said, people are getting mobilized. All the National Guard's getting mobilized. They're getting ready because they're concerned about looting and people's well-being. I mean, when that happens, that's going to be tragedy, okay? And that's when we see maybe another 10 or 15 or 20% down from where we're at. I think we could see well below 15,000 on the Dow, maybe into the low teens if they close the stock market for 3 to 5 days. I think they close the stock market for three days or more. I think people get real nervous about the liquidity of their assets, and I think you see like mass selling. So, it was interesting. I was listening to New Jersey, and I was listening to the essential personnel, and financial services is considered essential on every list. And, and that is absolutely key to people's emotional stability is their financial well-being.
Very true. It's like having air.
So Seth, we were looking at some numbers, and we've sent out a number of different emails, blasts, and stuff like that have talked about numbers. But I think it's good where we're listening to this, and we talked about it last time. But we have some numbers specifically on some pretty crazy events that happened historically, and some bad ones, right? And we're down between 30 and 35% in the market. But if you go back to 1987, Black Monday, okay, which is just a horrific time period in 87, the market was down 33.5%.
Yeah.
Over the next 12 months, we recovered 21.4% return was the next 12 months. So
and that was a pretty short period too. That was August 25th through December 4th of 87. Pretty short duration there for the market to stay down like that.
Yeah, not
significant.
Yeah. No, not bad at all. I mean, you really have to make sure that if you don't know what you're doing, for the most part, you got to stay in this thing. That's the problem. Because most people, and one of the reports from Fidelity said that, if you stayed in their fund, the return was phenomenal. But, the average investor in some of their funds did horrifically poor And the poor performance was because people would sell. Every time the market goes down, they sell. When the market goes up, then they buy. Like, no, it's the other way around. Warren Buffett said, the way you make money is to buy when everyone's in fear and sell when everyone's happy.
Yeah. And historically, as a market goes, right, what's typical? 5% happens all the time in a 1-year period. That's very common. In a 16 to 18-month period, we'll get a 10% pullback. Every 36 months, we're going to get a 20% correction. Now, we've been on one of the longest bull markets in history, right? 11 years. And we've had those. But it's kept on going. But now that we've gotten into this bear territory, it's a different conversation for sure. And what we've seen recent history is we've seen about a 50% pullback in the market. Okay? And we're not going back to 1929, and that was much more severe. But in a very recent history, say, 1987 on, that's been very common to see, more common to see a significant pullback of roughly 50%. And we've had those conversations and prepared for these times. And if you haven't gone through this yet and done the planning before, then it's a really scary deal. Or if you're looking at this as, wow, I had $1 million in the market and now it's 500,000, and that's what I'm pulling my income from, that's a really scary scenario as well. Okay? So trying to navigate, pull the pieces together, that's one of the things that needs to happen. And that's part of what working with financial professionals should look like. So let's talk about more of those numbers. Ben, you had a really interesting correlation happening, I think, there where you're talking about the, not correlation, but you were just talking about some of the numbers that were in our more recent history throughout these crises.
Yeah, I mean, we've got a number of them here, but I think there's a couple we can point out that are pretty substantial. I think, everyone's pretty familiar with the financial crisis between 2007 and 2009, where the market was down about 56.8%. But our recovery over the next 12 months was actually yield you 68% rate of return. I mean, that's pretty phenomenal. You got to remember, too, you're climbing out of a hole, so the rates of return are a little bit easier to create. But that's part of the optimism you have to have inside this. I think one thing that makes us unique, Seth, is the three-dimensional planning that we do, the fee-based, the brokerage, the insurance. And when you can actually utilize all three of those and the mixtures of the investments that drive opportunity inside there, you can create portfolios that have substantial foundations that can prepare you for times like this, that have some sort of backup, whether it's an annuity or cash or gold or whatever it is that you want and however deep you want that protection. I think the thing is people say, how busy are you? How busy are you, Eric?
Busy enough that I haven't been on here in a long time. It's been crazy busy. But a lot of folks are calling in, obviously wanting to check in on their policies, the commercial policies they have. Business interruption coverage is a strong topic right now. And then the others on the personal lines side are looking for some answers. So it's the phone calls are quite a few. Luckily, we're able to work mobily very easily.
Good deal.
But that's the thing. I mean, we're in the financial, the insurance, the whole world. We are constantly in people's limelight, and with everyone home, that's what everyone wants to do. They want to talk to us, and that's great because communication is the best thing to understand. And I think, Seth, I haven't had a phone call to sell or do any sort of mass selling. And I always tell people that when you have that person, because as we audit and teach and train financial planners as auditors ourselves, I've always found that the failures inside some of this stuff, in depressions like this, because that's what it is. It's a depression. It's a financial depression that's happening. We're not having economic collapse. That's a different story. But if you're having a pullback that's in the 20 to 40% range and someone's calling you to liquidate, it's usually because they're in the wrong investment. They're not in something that they thought they wanted, okay? But we have done a really pretty good job with a lot of different management around this stuff. But I have found the conversations, we've had more money pour into this market and into our office in the last few weeks than we've had in a long time. Big, brand new cash. And that's pretty phenomenal. I mean, that's a great statement for for what's going on because the average investor is actually pushing more money in. What's interesting was a Charles Schwab article, Seth, that I saw that said a lot of this downturn is from the short selling and basically the churning that's going on inside basically the day traders, if you want to call it that. Not necessarily trading every day, but the constant trading back and forth. The average person's putting more money in every day as this market goes down. That says a lot.
It does. It really speaks very well to, I think, the practice that a lot of us have developed. And if you take a look at the numbers as a whole, we've been saving at a higher rate. What has happened in the economy? I mean, we've had an increase in salaries. We've had a very steady low inflation. Savings rates are higher. All of those things are continuing to help. I think ultimately this is what I would say is if you are that person that's wondering, what do I do right now? Do I continue to the conversation we have all the time? Do I continue to put into my 401k? Absolutely. Do I continue to put into the market right now? Absolutely. Because you're getting a really good opportunity to really light some lighter fluid on your savings strategy.
I think when you're looking at your 401k, the bond holdings are not the option right now. I mean, that's okay. Wait, what are you talking about, Ben? I mean, that's an aggressive play. Don't have bonds. Well, with rates dropping, that's not the opportune scenario. Right now, with some of the big blue chip value stocks paying high dividend yields, you might want to start looking at some other scenarios because if the bonds are going to pay you nothing, well, you might as well leave it in cash or figure out how you want to get allocated. Get some help in that. But being strategic is going to be important right now.
Absolutely. Let's go ahead and take a break here. We'll come back. We're going to talk more about what is happening in the market, what you can do to engage, to be healthy, to have a mindset, and to look past what's going on in our current everyday right now and help you get on track, stay focused. Ultimately, we're going to bring some money-saving ideas to the table here. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com.
Hi, my name is Ben Brayshaw, one of the co-hosts of Money on Tap. If you have questions when it comes to your retirement and are looking for a personalized solution, contact us at Brayshaw Financial Group. In today's volatile stock market, we can help you plan to find your successful retirement solution. Am I saving enough? Am I saving into the right places? Do my investments match my appetite for risk? Do I have a tax strategy that is going to help me keep more of what I earn? How can I maximize my Social Security income? If you are like most people, you are getting closer and closer to your retirement and may be wondering if you're taking the right steps. If you're in retirement, you may be wondering, am I maximizing my income while preserving my estate and caring for my family? We talk about all things financial in what we call three-dimensional investing, putting a plan around your financial future. If you feel that now is the time to start getting the answers to some of these questions for your own situation, give us a call at Brayshaw Financial Group at 855-226-8551. Headquartered in Bedford, New Hampshire, we have offices throughout New England and across the country. We would love the opportunity to show you how we can help. There's absolutely no cost or obligation just to meet with us, and we welcome you to our office. Call us at 855-226-8551.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We appreciate you joining us today. This is a special edition for us because, there's so much news. And we'd like to do money in the news, but it's all like money in the news or Corona in the news. We've been highlighting some of the, what we know to be the facts today and the history of how have viruses worked throughout our market and how has the economy responded at different times when we've seen GDP pull back to 10%. You want to go back to, say, Asian flu of 1957? Right? GDP pulled down 10% that quarter, and then 3 quarters later, 7.5%. So there is a lot of positives here to talk about. We're not all just focus on the positive. We do realize there's some real fear going on. But I think if we can, we're going to try to help to understand maybe a little bit differently what is happening presently and what you can be doing. So we've talked about the markets, and we talked a lot about stocks, and we've talked a lot about the overall market. But one of the things that hasn't really been talked much about, and Ben was touching on it a minute ago, where the bond market has really been hit hard in many different ways, and lots of people do what's called a flight to safety. When the stock market or when fear shows up in the market responds to what? Unknown. Market doesn't know what's going on. It just runs, turns tail and run. And that's what's going on right now. But the bond market has actually been on a 30-year bull run. Lots of people don't even realize that. And it was expensive coming into 2020, as well as the stock market. So when we have sell-offs like this happen and that flight to safety doesn't look as attractive, most people right now are going into cash.
You know, it's funny, Seth. I've talked to a number of different mortgage brokers because people are asking me, hey, I got to refi. And I got a number of guys that are in that industry and very competent, capable, very strong in their profession and abilities. And what's really bizarre is that prior to this event, if you hadn't locked in a rate, banks are actually raising rates. And it's the hardest thing for them to explain because people aren't buying bonds. People are leaving bonds. So, creating a bond and selling it, the bank's got to figure out, like, what are we going to sell that? What are we going to sell this? What are we going to sell this bond of mortgages for if no one wants to buy? And it's just a higher risk, and they don't know what the value that's going to be. One gentleman told me the rate went up 1.25% overnight. I mean,
wow,
that's unbelievable. Can you imagine? You hear about these rates. It's like 3.5. He was telling me that they were getting to high fours. Banks were just saying high fours. They're like, and they're all in conglomerate. They're all in cahoots. I'm sorry, they're all in cahoots together a little bit because they're all taking this protective stance, saying we don't know what we can sell these things for, and we need to package them in a way that we know we're not going to lose a ton of money. And then the refi side, banks aren't doing all sorts of refi scenarios because they're losing money all over the place. In a zero cost closing fee scenario, and Seth, I know you have a lot of mortgage knowledge in the background. They're not even doing those right now because they're concerned that if everything does fall down and hit hard, and then rates do really drop, and we go to negative interest rates, then man, we're going to be, they're going to be in serious trouble. So it's a bizarre space right now in trying to get that done.
Yeah. So another area that has been kind of hit hard is those muni bonds, the municipal bonds that are tied to municipalities, right? And they're fairly attractive to a lot of investors. We've seen a lot of returns out of them as of late market. But right now, this last week, there was actually, I think, a 5% drop in one of those major muni bond holdings out there. And that is not indicative of a typical market that we would see in a pullback like this. And one of the reasons that seems to be happening is because there is a fear from the typical investor that municipalities are not going to be able to meet those bond obligations. Okay, so what do we see when
that's a real fear, Seth? Yeah. That's a big deal. If you're listening today and you own a ton of muni bonds, like, buyer beware, because the thing states can't go into debt. Only the U.S. government can. So what does the state do if they don't have any funds? And, I mean, this is crazy. They're talking about a couple $1 trillion of bailout money across the board, and they're not even sure that that's enough.
Yeah. Yeah. So there's a lot of fear out there. What are some of the things that we've seen? We've seen a travel industry hit really hard, right? Makes sense. Retail consumers are not out there consuming. We see that there's going to be a significant boost. Unemployment's going to go up. Estimates right now are around second quarter GDP down 5-10%. Okay. First quarter was 2%. And, this is important because right now the economy can withstand a punch like this. That's what we would try to say. We don't know much more other than, we'll know more in 14 days, But there's a lot of other good news that's starting to, I would say good news, that's starting to come out around, for instance, Fed stepping in. Second time in our history that a non-economic event has caused them to step in. First time was 9/11, and now, we were just talking about refis. Well, refis, even though the rates might not be as attractive as they were 2 weeks ago, people are still going through a refi process, and a lot of them that I've talked to are still potentially lowering some of their costs or some of their monthly outlay just because of terms conditions. But there's more money in the pocket. So when this is all said, if this is all said and done, if 14 days, there seems to be getting arms around it, we could see things change so dramatically and quickly. And one of the reasons that seems to be, or potentially seems to be, is because there wasn't something systemic in the economy happening prior to this. This is outside of the economy and the numbers prior. So if it's a quick punch, if that's the case, if we get our arms around this quickly, we very well could see something change with the liquidity that we have, with the Fed stepping in, with the dollars that are like the $1 trillion that are rolling in. There might be more there, Ben. There might be that package may not be enough when you start talking about municipalities not being able to meet their obligations. That might be very, very much a part of it, but it seems to be from the top-down effect or approach that there's going to be potentially more liquidity that they would tap into to try to make sure that the governments are meeting their obligations as well.
Seth, the government's going to have to do something to make this kind of rebound is where we're at. I mean, that's our expectation. I think we have a lot of stuff going on inside our market that's a little more crisis-like, because even though I'm not a real big believer that this is a horrific virus, and maybe I just don't know, because I just don't. But everything I'm hearing says, the world's not going to end over this coronavirus. But what I have seen is that when you shut down the United States economy for 30 days, it's going to take a long time for people to build trust that they can go out to break those barriers of fear that our news stations have created. I mean, they've created fear at levels that are unnecessary unless we really don't know what we don't know. And I think that is a different issue than just coronavirus, right? We've created real economic fear. What do you think, Eric?
I think that a lot of people are not thinking about just the next couple weeks, but they're now thinking 6 months out and making decisions now that they probably won't forget in 30 to 60 days. You know what I mean? Like they're going to pull back, and they're going to stay pulled back because of it, in my opinion. And so there's, you've got to be able to think about it. What if it does rebound real fast, like Seth was saying? If you have the opportunity to take advantage of it now's the time.
Eric, do you think? I mean, I'm thinking hopeful rebound. Like I think the market rebounds because there's so much hope it will rebound. But then I think people are going to say the numbers in the third quarter, because the second quarter are going to be horrific. The first quarter is going to be horrific. I think the third quarter is going to be like, not really as good as we thought, pullback again. So I think there's expectation to just kind of write off this first 6 months and assume it's all good and everyone goes all in. And I do think there's huge value in stocks right now. I mean, huge value. But if it pulls back again, what happens?
So let's talk about what are some of the catalysts that could change that, I think. Okay, so what are people doing right now to influence corona? Besides social distancing, we have Moderna, which is one of several companies really trying to get their arms around this. Inovio, which is bringing 3,000 doses to clinical trial and could have over 1 million ready to go before the year's out. I think it's Regeneron, Kazera. I'm terrible at the pronunciation of this, but that's one of the arthritis drugs that might be helping existing people with lung infections. And what that could look like is people just don't have to go to the emergency room because they get this treatment, and they're just not at risk as much as they were previously. But there's several. I mean, oh my gosh, loads and loads of brains right now focused on how do we fix this? How do we solve this? What was the company that solved the Ebola scenario. I'm trying to remember the name of. They were on the front line and they solved Ebola.
Seth, I want to back up though. I want to back up a little bit because the average listener, and I think my question really was more about the average listener is not going to find the biotech company that came out with whatever it is and go buy that in time before the hedge fund guy who already knew that the second, already had the insider trading information, whatever, owns that.
You want to look at the chart? They've already taken those positions.
Yeah, exactly. Yeah. And we can see those. So the average investor, right, the person who's listening to us today, I would say, where do you go now? Like, what do you do now? How do you respond to a 30, 40% drop in your portfolio?
So what happens when my point is with those is not necessarily this is the buy that we go to the market and we grab right now. Okay. It's super speculative. We get that. But I think my point is that if there's a turnaround, if there's a consumer confidence factor that we're talking about that gets behind this, when somebody says, we got this, we have the solution, people don't have to worry and panic anymore. What are they going to do? They're going to come out of the woodwork, I think, and just be like, thank goodness this thing's done.
That will be 20 or 30% of America. There'll be another 20 or 30% of America who will be a little bit hesitant for the first few weeks or month. And then there'll be another 20 or 30% of people who emotionally probably aren't stable enough to, come out of the woodwork for 6 or 12 months, like Eric just said.
Right.
It's not like, hey, we're all it's not a light switch for people. I mean, I'm not
it's
really.
It's not a total rubber band. You're right.
Right.
Yeah.
I mean, Eric, I don't know about you. You're sitting in Washington State, okay, probably the number one place where everyone's, probably the most aware of everyone around them. I walk into Home Depot or the grocery store, I'm really not worried in good old New Hampshire about getting corona. But I see people with masks on. I mean, the likelihood of me getting it in New Hampshire is extremely slim. Even the places where they had it, the people don't even come to our area. Mm-hmm. So it doesn't mean that someone's not traveling up from Massachusetts with it and so forth. But you guys are living, our kids are growing up in a fear-based moment. I said to my kids today, we had a little family meeting. I said, listen, guys, we can't overreact. We can't act in fear. The Bible says don't live in fear, okay? And we need to really just make sure that we're smart about this. If you see someone coughing, don't freak out. Just move away. Wash your hands.
And wash your hands.
How many people, I go to, use a public restroom. I see people walk out of the restroom and don't wash their hands all the time. It disgusts me to no end. I see it constantly. And I don't even understand why people don't do it.
Still? Right now?
Well, not in the last week because the public restrooms are basically closed. But
there's a bonus.
Yeah. But you know what? You go to a ball game, you go wherever, and it's like we don't have a great. Maybe this will change the level of cleanliness we live in a little bit, honestly. Because as clean as we think we are as a nation, there's not. My wife says the same thing. I see people leave the bathroom, they don't wash their hands. We need to be more cleanly, and then the cleanliness is what takes care of it.
All right, we are going to take a quick break. You're listening to Money on Tap. You can reach us at 855-226-8551 or reach us at info@yourmoneyontap.com. When we come back, we are going to talk about how you can save money. It's important right now, adjusting the sails, getting in front of and making some decisions about how to keep yourself on track and how to keep yourself focused and disciplined around your financial plan. That's what we're going to be talking about next. We'll be right back.
Hi, my name is Seth Krussman, partner with Brayshaw Financial Group and one of the co-hosts of Money on Tap. One of the biggest concerns and largest expenses people face today is taxes. Without thoughtful planning, taxes can destroy future retirement dollars, eliminating the possibility of a timely retirement or dreams of what you want retirement to look like. If you're like most people, you're getting closer and closer to retirement, and you may be wondering if you're taking the right steps. Will my income be enough? Will rising taxes force me to give up my dreams? How does inflation factor into all of this? These are real concerns, and you're not alone. Putting a plan around your financial future is what we do. If you have questions when it comes to your financial security, and if you're looking for a personalized solution, contact us at Brayshaw Financial Group, 855-226-8551. It's time for you to start getting answers to your questions. Headquartered in Bedford, New Hampshire, Brayshaw Financial has offices across the country. We'd love the opportunity to show you how we can help. There's absolutely no cost or obligation to meet with us. Call us at 855-226-8551. 855-226-8551.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We are so glad to have you with us today. We've been talking a lot about Corona, what has been happening in the markets, what are some of the things that we're having conversations with our clients about. It's really hard to really wrap your head around and your arms around at times, but we're doing that right now. And we're getting into solution mode with you. And we're talking about how you can start saving some money and how you can keep yourself focused and on track on your financial plan.
Well, you know, I'm really excited that we have Eric. Eric, you were able to make some time today because I think this is one of the things that people seem to look at the most, which is various expenses, including, I mean, Eric runs our property and casualty division. He does all the insurance stuff on the side of auto, home, commercial, but all those lines. He is an expert in this area. And Eric, tell me a little bit about what's going on in your side of the space of this, for what you do with us and so forth.
Yeah, well, I'll say that a lot of folks are obviously worried about whether they will be in business or not in the near future. And a lot of the service industry in our area, I've had those texts coming in and asking if there's coverage, and letting me know that they had to lay off 13 to 15 employees on Monday, and all of these fears are creeping up. But in addition to calming them a bit by some solutions that we've been able to find, which is a lot of those service industry policies have your projections are what your premiums are based off of. So if now you are finding out that you're going to make $20,000 less this year, or you're going to pay $20,000 less to employees, both of those things can be mid-year adjustments that you can talk with your broker about, and in some cases significantly lower premiums mid-year. Now, the insurance industry has locked down changes in this interim, this period where we're kind of locked down physically. Well, they've also locked down making changes to a policy, making drastic, not all changes, but there's going to be a period of time where that's lifted. And when that is, you need to be able to go to your broker. You need to go to your agent and say, hey, let's reforecast all of these so that the rest of the year, and that's an immediate money back for them.
What are you seeing inside of like, what are people doing inside their policies or trying to do inside their policies besides just that? Like, I mean, what about limits and deductibles?
Yeah, if you're driving less, I mean, if we switch from commercial and we go to the personal lines, auto, home, and basically auto's the biggest one. People are increasing deductibles. They're taking off coverage as if they were driving around. They're putting 2 of the 3 vehicles that aren't going to be on the road anymore into a storage plan. There's multiple things you can do, and those are some of what people are trying to do. Even now, lowering annual mileage, all of those things can put extra dollars in your pocket for this time.
So, I mean, it's not always saving costs, saving money, right? I mean, I'm wondering, is there ways that people are trying to do that and maybe exposing themselves to unnecessary risk simultaneous? I mean, having a good intention, but possibly having, not a good outcome.
Yeah, if folks are not diligent enough to reapply those limits back when they're on the road and out and about, then yeah, there's always that fear. But you've got to look at yourself and say, hey, what type of relationship do I have with the agency, where my policies are, with the brokerage, and if they're responsive to you generally, throughout the year, then you can make these swift changes. And in some cases, like we mentioned earlier, that they may be planning to kind of cut back for the next 6 months as it is. Well, maybe we don't need to have all of this back on there full force, because we're not all back to full force. That's what I would say.
One of the things that that you do so well, and I know this is why that side of the business has grown so well, is that the crafting and the ability to find people value and cost savings. That's always been kind of your ability. Share a little bit about. I mean, because I'm sure we have a lot of listeners who don't necessarily use us for property and casualty. I mean, we know there's a ton of people that listen to the show outside of our client base. Tell us a little bit about that, and just a little bit about what makes us different on that end.
Well, the biggest thing is if you have an agency that is actually a broker, that's the number one piece. Independent brokerage that can shop multiple carriers is really the biggest value. Second to that is essentially being able to work with the different carriers if they time it properly and bundle the whole risk management strategy into one carrier. For instance, you're gonna be saving automatically just by bundling those different policies together. It's the biggest piece, I would say, is when you are having someone look at that every 6 months to a year. Over year, 10 years down the road, you're going to have a significant amount of money that you would be able to use and invest in better ways than just giving it out to the insurance companies. So that's where this whole situation is so unique, because you can take all of that and get that master strategy executed.
That's good. That's very good. I think that's one of the things that people don't really understand is the need for diversity inside the insurance providers, because I remember I was working with one organization, and when we actually priced it out, found out that there was another company that was so much lower for somebody, and I was trying to figure out, like, that's just not fair. How could they be so far off? And just found out that that insurance company just specializes and focuses on that type of coverage for that type of organization. And having that knowledge and having that background is so vitally important to properly getting that. I mean, I have done some of the same stuff we're talking about here. I made calls to, you guys, and just adjusted my deductibles. I looked at my coverages. I did all of those pieces. I wanted to make sure that we were still properly insured, but taking on more risk. Like maybe my deductible's really tight, and I can take a little bit more risk in that area and save some dollars. I mean, it doesn't matter what business you're in. Every business is affected by this economic downturn. We've actually done really well through this experience, but honestly, we're still going to see economic outlay from this. People are going to have to liquidate retirement plans potentially if they can't get back to work. What about the client who, can't get their job back because that company doesn't have the demand yet to reemploy them? That's a real risk.
Really is.
So you have a ton of experience. This is not your first rodeo. Very unique in where we're at, but I want to really hear just one example from you, or just one of your favorite stories, because there's been so many that have traveled across your desk and in your business. One of your favorite stories that you've been able to right now answer the phone, find somebody a solution that helped them know they're getting taken care of.
Yeah, well, I will talk about a home builder that I know is a client of mine, and he had a run of 3 years where there were some claims, and coming into this renewal, premium jumped so high that he was seriously thinking about potentially closing up if that was going to be the way it was going to be. So we were able to shop that. Of course, we talked about that being a broker, make that change. So we saved him about $10,000, but he was still over 200% increase based on these large claims. So it's quite a bit. When he's calling me now, freaking out about the rest of that premium for the year last week, because now the The jobs aren't there. They're going to slow down. He's thinking about that slowdown for the next, basically till the end of 2020. And I mentioned this before, but being able to recalculate payroll and recalculate what your gross sales look like for the year, that revenue, your premiums are going to drop as well. So even though that is locked down now, just knowing that in the future we're able to make that change is so drastic. We're talking $20,000, $30,000 difference. And so if you're not with, an agency or brokerage that can make those mid-year changes and has the capacity to do that, I think it's time to look and find someone that can.
Yeah, give us a call if that's a need for you guys at 855-226-8551. That's 855-226-8551. There's a lot of people out there that have a lot of financial needs going on, a lot of concerns. I mean, we've taken some cuts. I was telling Seth that we cut our cable way down to basically news stations only.
Little funny fact here, was trying to come up with some of these cost saving ways that we could help a client, and he realized, I don't get cable, like I don't watch cable TV, but I do YouTube TV. It's kind of the last one that we come to. Anyways, he canceled YouTube TV because he wasn't going to watch the final March Madness. So there was like $50 back in his pocket right there.
Yeah, making those decisions, I actually lowered the speed of my internet at the house and signed up for a special deal they had for the lower speed internet. Didn't tell my kids, and I haven't heard a complaint yet, so I'm okay with that. I was like, but
that's coming.
Yeah, it's coming.
I think the key was there, you didn't tell your kids.
Well, yeah, no, that was the advice of the Comcast provider I was talking to. She was a smart cookie. So I think taking those steps right now, that's just prudent, and unfortunately, it's going to hurt other businesses. And I know Trump's saying not to do this and so forth, but the government's not going to be able to band-aid every problem we have. We got to take some ownership of some of the extras we have. And if canceling Netflix, canceling those subscriptions is relevant to getting some financial stability right now, that's important. I know that people are going to be calling because they're not going to have their job back and they need money out of their 401k. That's going to be a scary time for people. We got some recovery ahead of us. I do think the market has a sharp upward turn. I think Trump's right about that. I don't think it's backwards to 29,000 right away, but I think if the market recovers and we can get past our own fear as a country, I think we could see a massive increase in our economy because of the amount of money they're pouring in right now. That's a possibility.
This is not going to be something that hits everybody for sure. It's going to hit us all in different ways, but not everybody the same way. But even people that are, doctors and are, surgeons, they're being told not to do, critical surgeries at this moment, right? Elective surgeries are going away for right now for a lot of them. And, sitting down and taking a look at our clients' finances and trying to figure out, okay, we understand that this is challenging, but is it something that you have to do something drastic in your life? Or are we just talking about pulling back and trying to take some baby steps here? And at least if we take a look at the picture, we can understand better where you're really at. And that process is what we do all the time to help you to get where you can understand what you need to do next. Okay? And there's a ton of peace that can happen with that. And we want to make sure that you're in the best position possible. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Thank you so much for joining us today. Eric, it was a real pleasure spending some time with you. And again, thank you for what you're doing for our clients every day in your business. And we cannot wait to do this again.
Thanks for joining us today. You've been listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Also, we're in a podcast. You can find us at any of the podcast venues out there. We appreciate the likes and the listens. We're also at Facebook at /3D Investing and Twitter at BFG_LLC. We appreciate you joining us here today, and we hope you make it a great day and a great life. Thanks for joining us with Money on Tap.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.